All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Eventful market in terms of some of the magnitudes that it is moving. Nice to see. From a trader standpoint and from an investor standpoint, we just haven't had many of these periods. And I know there's the perception out there that, a technical trader should be able to call tops and bottoms and highs and lows on everything. But that's not realistic. And what these kind of shakeout periods do is they create an environment where you start to notice or see some real differences in stock performances and in areas that you go, wait a minute, that's holding up really well, or this is getting slaughtered. And a lot of times when we have a market like this, that is meaningful. When we have a market like what's been, it's not meaningful at all. We talked about UTX the other day. It's not that meaningful. But when we have a market like this, yeah, it's a lot more meaningful, and just something that creates more value in terms of building a watch list going forward, and understanding, okay, which stocks are likely to outperform in the future. So we'll take a look a little bit at that here this morning. I also want to talk about three stocks that I expect to hit new highs when the whole coronavirus element settles. I'm not saying it is settled. In fact, I don't think it has. But things that I'm watching and how I'm looking to trade them when the dust settles here with the coronavirus. So we'll take a look at that. But let's start with the challenge. We're in all cash. I talked about it yesterday. Went through the watch list. Chances of getting signals here yesterday and today very slim. And if we come in and we just take a look and run the 3-7 crossover scan, there's nothing on it. Here's the bearish crossovers. There's not a single one here today. And the bullish crossovers, there's not a single one here today. And that's to be expected. We looked at where a lot of these stocks were. There were some that had a chance, like AT&T, if it can find a little bit of a rally, it could give a nice little signal, but it sold off pretty hard into the close yesterday. In fact, a lot of the stocks that were holding up decently mid-morning really kind of fell off later in the day. They're what solved some of the heavier sell pressure. So we're not getting any sort of real crossover action there on them. And so I'll be patient. I'll wait and, wait for the crossovers to come in and for the signals to come in with them and go and react accordingly. I do want to talk about GOLD very quickly. Michelle forwarded me over a couple questions on GOLD. Now, GOLD here, Barrick Gold, we got in, right down here, and we ran the majority of this run. We caught $3 on an $18 stock, which is decent. I know I didn't hit the high. The next day gapped up, and then yesterday fell off pretty sharply. And market was down. Why did gold fall? All of this. Well, one of the things we have to keep in mind, or one of the things we've talked about with gold from the beginning, is that this is not a fear trade. If you're going to trade gold, you cannot look at it in the context of, well, if the market drops, then gold will go up. If the market goes up, then gold will go down. Yes, some of that will come in from time to time, but as we saw yesterday, S&P was down 100 points and gold was down. Right, the day before S&P was down 100 points, gold was up. Right, so it's just one of those where to look. Yes, there are going to be some times where fear elements come in, but that's not what the trade is about. All right, and so to look and to say, well, all right, I expect the market to go down more, so should I buy Barrick Gold? No. You have to play it as it is and as the chart is specifically for Barrick Gold or for the GLD. And the bottom line is we hit some high volume overbought positions, right? And so hitting those high volume overbought positions, you expect some sort of pullback. I'm hoping for a little bit more of a pullback. That way we get a little downside cross and a little upside cross and can get back in and ride the next move, as I do think Barrick Gold has significantly more upside to it over time. But in the short run, a little pullback, would sure be nice. We saw GLD, or the price of the raw material gold. It started to turn down Monday morning, even before the market started to find any sort of stabilization. So really, just that fear trade was only worth a little bit, but the majority of the run, all right, for gold came when? The majority of the run came when the market was up and when the market was at highs. And we talked about many times, this is something where we can see the market hit new highs, gold hit new highs with the dynamics that are out there. But as I look at gold and I see the action that we've seen on it this week, it's just something that's going to need a little bit of consolidation or a little bit of rest. And we saw that back here in June, right, where we had that first nice move, then we had a little pullback, another nice move, then kind of longer-term consolidation. Unfortunately, we didn't get enough of a pullback or consolidation in the middle of June to be able to, get the end of June rally. So, hoping we get a little bit of that to be able to grab it for the challenge. But, this is not, and I can't reiterate it enough, this is not a trade on a fear trade. This is not a safety trade. This is not something where you can say, well, I'm just going to go buy gold and, if the market goes down, it'll protect me. That's just not the case. And, you look at the majority of the rally in gold that has come when the markets have gone up. And so, that's just something that has to be said. And, so please do not buy gold or hold gold because you're thinking, well, this is a portfolio protector. Hold it for what it is, which is an absolute monster breakout and long-term, breakout from a 7-8 year consolidation. And, the longer things consolidate, the bigger the breakouts. And, we see that breakout continuing, and it started last year. It's going to continue through this year, and I expect it to continue for the next 3 to 5 years here when it comes to gold. All right. So anyway, that's gold. So nothing for the challenge. Gonna stay in cash. If there is a signal here this afternoon, then that will be posted in the message feed. Other than that, I will be away this afternoon and not be able to get on video, but we'll be back on video normal schedule here tomorrow. All right. So let's go take a look at, there's always, when the market dips like this, there's always this, buy the dip. I want to buy the dip. What stocks do I buy? Where do I step in? Blah, 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 and all of that. For me, there are 3 stocks that I'm pretty comfortable with saying are going to hit new highs when the dust settles. What do I mean by dust settles? I mean when the market pullback is over and when we start to climb on back. Today, I know the market's up. It's up, 45 points? Pretty nice rally. Not very much compared to the context of yesterday, but a heck of a lot compared to the overnight lows. And if you look at the overnight lows, 3091 on S&P futures, we are now 80 points off of the overnight lows, which is massive. I mean, that's a massive move, and it just tells you a lot about what the markets are concerned about. They don't know. They don't have the information. There's an uncertain element into how the coronavirus element is going to play out. There are a lot of guesses. There are a lot of assumptions, but there's no real knowledge when it comes down to it. So markets panic. They create these opportunities, and they create flushes in various stocks. The 3 stocks we're going to go take a look at are Visa. We're going to look at Netflix, and we're going to look at Chipotle Mexican Grill. All 3 of these stocks have something in common. What is that? Well, let's come here to Estimize to take a look. We'll take a look at earnings projections. Earnings projections for Visa going forward are double digit. Yes, this next quarter only 8% growth, but after that, double digit, double digit, double digit. Revenue growth, double digit, double digit, double digit. That's the theme. If I'm going to buy a stock on a dip and expect it to go to new highs when things settle out, I want double-digit revenue and double-digit earnings growth. More concerned about revenue growth, less concerned about earnings growth, but I would like to see both of them. And those are the stocks that we tend to see recover the best. They tend to be the stocks that recover the fastest, and they tend to be the stocks that not only hit new highs, but hit new highs by a mile. Take a look at Visa. Clean up the chart. Let's go back 3 years. We'll go back 2. Back here, October, November of 2018, December. Was Visa immune to sell-off? No, it wasn't immune. Visa has never been immune to a sell-off, and it hasn't been this time, right? The stock has gotten hit pretty hard. It is not one of those stocks you can look at and say, well, it's so good that it's immune to any selling. It's not, and that's a good thing. Because what do we know about Visa? We know that when the dust settles, when the fear element comes out, Visa almost always hits new highs. There's only one quarter, well, now 2 quarters, since the IPO of Visa, right? And this is a stock that IPO'd, a long time ago. Let me pull it up exactly when. 2008 IPO. There have only been 2 quarters really since then where the stock hasn't hit a new high. The market's gone through a lot in that period. And so this is something where if I'm going to look and expect a stock to hit a new high, well, Visa's high on that list. And it's number 1 here for me. Number 2 is Netflix. Now, you know I'm bullish on Netflix. I've talked about it. We talked about Netflix through this whole sell-off and the ridiculousness of this idea that Disney Plus was going to replace Netflix. And it's very nice to see that those ridiculous arguments are gone out of the market. But those arguments created a nice dip, right? And so we've had a nice rebound on Netflix. And you can see what the pullback in the market has meant for Netflix. Not a heck of a whole lot. Not a heck of a whole lot here. Well, what about Netflix numbers? Do they have double digit? Well, here's their earnings growth: 111, 153, 24, minus 24. So double digit, absolutely. What about revenue? 27, 21, 19, 18. Yeah, double digits. Yeah, is it slowing a little bit? Yep, it is slowing a little bit, which is a concern, which tells me it's not going to be pullback immune. But that is massive continued growth for the company and for a stock that is now consolidated for 2 full years. This isn't a stock that has made a monster move already and who expectations are sky high and, is one of those where you kind of look and you say, man, this sure needs a consolidation. No, this is a stock that's had a massive consolidation. And I know when we say, 70-point range or 100-point range, most people don't look at that as consolidation. But when we back this out and we look at the big picture here with Netflix, it has been a monster consolidation here for it. Not only that, but the stock's down 0.5% this week. Keep in mind what the market did the last 2 days. The stock's down 0.5%. Aggressive selling? No. Really going to be affected by coronavirus? Probably not. In fact, it could be affected positively. More people at home, more people, needing some entertainment outlets. It's a theory. One that I don't think can be proven very easily, but it's a theory. But even without that theory, double-digit growth on the revenue and on the earnings side, monster consolidation, and breaking out of this consolidation, Where does that leave the stock? Well, that leaves the stock pushing into 550 to 650 price targets. It's a monster move. And if you look at the valuations, they're not going to be all that stretched if it makes that move. Here with Netflix. So this is one that I want to be involved with. This is one that, when the dust settles, we'll be hitting new highs. But like Visa, it's not immune to, pullback. It's not one you can look at and say, well, it's just immune. I'll just buy it and be golden. Have to get the timing right a little bit. Now, the last one here, number 3, and we'll go take a look at the timings, but number 3 is Chipotle Mexican Grill, CMG. Here's the earnings, 11%, 37%, 25%, 54% growth. This has been a double-digit earnings growth machine since the Bears kind of lost their mojo with CMG, and we talked about it last year, and this stock just the ability for it to double based on what its numbers are. On the revenue side, here we are, double digit. So we have revenue and earnings double-digit growth. Is it immune to pullback? No, it absolutely isn't. Is it a stock that's up pretty big? Well, yeah, this stock is down here at 300 mid-2018. It's now up at 900. And I made a comment down here that this thing could go and hit 1,000. And, that seemed kind of ridiculous at the time because, well, that's a long way away, a triple, quadruple. But why did I make that statement? I made that statement because of the numbers, because of the double-digit earnings growth, because of the double-digit revenues growth. And if they can maintain that, it is a huge catalyst for the stock. They still have it. They haven't lost that. They still have that double-digit earnings, double-digit revenue growth element in play. So this is one that I can look at and say, all right, when the dust settles, I do expect that it goes and hits a new high. Now, getting into these. When? Visa, Netflix, Chipotle, when do you get in? How do you, get involved? Well, let's go take a look at Netflix. Let's take a look at the options here on Netflix. Let's come out to June and take a look at the spreads. The spreads are $1, $1.50. They've come down a little bit since this morning and since yesterday. But when the market goes haywire, right? When the market goes big moves, the spreads open up, and they open up in a big way. But what I want to do is I want to get into this. And so with implied volatility being relatively high, I want to do some sort of call spread where I'm buying a 390 and I'm selling a 400. Am I going to do that today? No, the spreads are a little too high. The pricing isn't the greatest there for it. Could I come into May? Yeah, I could come into May depending on how aggressive I want to be, but it's going to be a little bit cheaper. But it's one way to offset the implied volatility. But I do cap out my gains in that scenario and in that case. Right? And that is something that I don't know that I necessarily want to do. But I don't want to buy this on an up day. I don't want to be, buying the call spread on a day where the stock is, rebounding nicely. I want to be buying the call spread on, another fear dip. And maybe we get another fear dip. Maybe we don't. But I can be very patient with these because not only do I expect something like Chipotle to go hit a new high, I expect it to go significantly higher. So I don't have to call the bottom. I don't have to sit here and with this ridiculous notion that I have the tools to go out and no matter what it does, absolutely pinpoint the bottom. I know traders, that's what they expect from themselves, and that is expected of most traders, but it is unrealistic, it's nonsensical, and yes, occasionally you will be able to, because occasionally the setup will be so good, it'll be so obvious and so clear, but is it obvious and clear right now with Chipotle? No, it's not. It simply isn't. We can apply all the technical indicators we want here to it, and they're all in the middle of nowhere. You can't say, well, bottom is in right here. It could be. It could be, but very difficult to say that. And more often than not, I'm just going to need luck on my side to be right. So I'm not looking at picking the bottom. I'm not looking at that kind of nonsense. I'm looking and saying, okay, has the stock stabilized a little bit? Are the option values something that are nice? Am I willing to start to step in? With Visa, with Chipotle, for me the answer is absolutely not. Absolutely not. This is a relief bounce here today off of an absolute shellacking. And yep, yesterday could mark the ultimate bottom. We've seen that. We saw it here in October where we just had this absolute bloodbath, and okay, off it went. But when we see volumes of this nature, of this magnitude, more often than not, the lows are retested. Many times they're broken. And so that's what I want to see. I'm going to be patient. I'm going to wait. Yep. If it just decides it's going to go V shape and up and up and up, I'll get an opportunity to buy it after a big move. That's fine. There's still a lot of room to a new high and everything else. So I don't have to get very impatient and very eager to go out and grab the bottom. But these are the three stocks that I want into most. I'm watching Netflix today, rise and rally $19 and going, stop. Come on, you dumb thing. Stop. Right? I mean, this is something where its performance metric relative to the market is pretty fantastic. Am I willing to buy it right here? No. I'm going to be patient. I'm going to continue to be patient. I don't like the option pricing here with it. But, in the long run, am I afraid to buy stock on it? No. If the stock dips down to 320, great. I want to be a buyer of more. But to hold some long term, to me, this is one of the best stories out there in the market, or continues to be one of the best stories out there in the market. And we finally have had a very long term consolidation and a very negative news story, propagated by this whole Disney Plus, garbage. Now, speaking of Disney, last night, Bob Iger, CEO of Disney, stepped down, walked away, relinquished his CEO duties. He has been an absolute monster of a CEO for Disney. You can see what the stock has done over the years during his tenure. He has been incredibly kind to investors. He has brought the Marvel Universe into Disney. It has been or Star Wars into Disney, the launching of their streaming service. It has been a total win for Disney investors and for the company during Bob Iger's tenure. I've talked about Disney many times over the years. And talked about how when my daughter was born, I bought a bunch of Disney stock. It went down afterwards. Got hit hard in 2008 with the financial crisis, but continued to buy. Continued to buy over the years and held it and held it and held it. And last year on the big uptick up into the 130s, I took it off. I took the position off. I just said, okay, you know what? This is something that's just priced too much for perfection. And I know I didn't hit the top, but, just too much there. And I had made the comment all along throughout this time period that I'm only going to get rid of the shares when Bob Iger steps down. When he steps down, my outlook on Disney changes. He's gone through a lot with Disney. He's transformed them through a lot of things. He wants to be part of the good times. And he had talked about stepping down many times, but he knew good times ahead, good times ahead. Why am I going to step down? Now he decides to step down. He was expected to step down next year. He does it prematurely. Does he know something? I think he does. I personally think he does. Now, I'm not involved in the stock, as it is now. I had taken all my shares off before, this news, but this news makes me want to not be very involved in Disney. I need to see how this is going to play out. I need to see what the warning signs are in their numbers. The valuations are not very compelling right here. We can't look at Disney and make an argument that this is an inexpensive or a cheap stock in any way, shape, or form. It's not immune to coronavirus. It's not immune to economic downtick. It is highly overvalued, and now they just lost their arguably best CEO in history. No, I know analysts are out defending it. Analysts are out this morning saying, "Hey, buy it on the dip," and I don't want anything to do with it. Am I willing to trade it on signals? Absolutely, but from an investor standpoint, this is now when I need to see a haircut. This is when I need to see, okay, we get this stock, get into some valuations that are cheap, inexpensive, and worth buying from an investor standpoint. Because right now, it's at this point, it's no more anything than a market play. If market goes up, Disney probably goes up. Market goes down, Disney probably goes down. And I can't expect Disney to outperform the market anymore. Okay, so that's my 2 cents on Disney. I may be dead wrong, but I don't want anything to do with it. Now, last but not least, here is Hershey, and this is one I didn't include in my stocks that I expect to hit new highs. I didn't include with Visa. I did not include with Netflix. I did not include with Chipotle Mexican Grill. But this stock has stood out. We've had 2 days of selling this week, and Hershey is now up on the week. Not only is it up on the week, but in the monster volume selling that we saw, Hershey, saw heavier volumes, but not the monster volumes. Hershey's had a nice little consolidation after a very nice run, starting to break into new highs. Stocks breaking into new highs when the market's doing this, they just tend to go to much higher new highs, and that's what I expect to see from Hershey. The numbers on Hershey aren't anything spectacular. Their biggest thing is they continue to improve their margins, and that's been one of the big things for Hershey over the last 2 years. Is the margin expansion has been pretty heavy. And when you're dealing with a company like Hershey, you can't expect double-digit growth, but you can expect that they improve the margins to improve the underlying business, and that's what they continue to do. And it's one of those where they continue to expect margin improvement this year, and as long as they have that margin improvement with revenue growth, we're going to be talking about a company that continues to grow on earnings and a company that continues to move on higher. Disney's not very tradable on an option standpoint. Occasionally it is, but most times the options are terrible. That's why it's not in the challenge watch list. The options they're just not tradable for the challenge. So, but this is one of those where, with what we've seen this week and the shakeout in the market, we have Visa, which on the week is still down huge. I know it's up $5 today, but still on the week it is down big time. Almost 20%, or excuse me, almost 10%. We have Hershey that's actually holding a gain on the week. That's one of those where we don't see many of them out there, but one of those where you look and you say, all right, new highs are coming for it. It doesn't mean it doesn't dip a little further, off of these levels, but in the context of the next several months, more new highs are coming here for that stock. Thanks for hopping on. Thanks for being with us here at Trader Minute. Have yourself a fantastic day, and I'll be back on with you here tomorrow morning. Take care.